binti HASNAWI, Fatimah Zahra binti Mfrs, Siti AISYAH binti HAMID, and FARAH AYUNI binti MOHAMAD. And we are from BIA 6C.
Hi, I'm NURIN. So today I'm going to talk about accounting policies. So what is accounting policies? Accounting policies are the guidelines, bases, conventions, laws, and procedures that an organization use to prepare and present financial statement. Plus, besides that, the International Accounting Guidelines Board has adopted standards and interpretation known as International Financial Reporting Standards, which is IASB. So for the next one is, accounting policies can vary significantly, but they are all covered by the IFRS or GAAP standards. So there are some lists of the most common policies used by business. But then it may be vary depending on the sector in which the business operates. So for the example, I'll give 3 examples. So first of all is policies on depreciation and inventory, fixed asset valuation, and also investment valuation. So there are some examples for the accounting policies that is the most used by business. And then I will tell you guys about how the companies apply these accounting policies. So my companies is Apollo, Food Holding Berhad, and Oriental. So for the Apollo Food Holding Berhad, they are used policy. The policy that they are used is property, plant, and equipment, which is originally valued at cost. And for the Oriental Food Industries Holding Berhad, they also use the same policies as Apollo, which is property, plant, and equipment. So that's all from me for the accounting policies.
Hi, my name is AYUNI binti MOHAMAD, and I will talk about accounting estimate. An accounting estimate is a rough estimate that value of a business transaction that cannot be measured precisely. Estimates are used in accrual basis accounting to make a financial statement more complete, typically to predict incidents that have not yet occurred but are due to be likely occur. As more information become available, this figure will be updated. For example, a provision for bad debt losses, a provision for failure in the event of a warranty claim, and the last one is inventory of work in progress. Next, I will talk about accounting basis. The difference between cash and accrual accounting lies in the timing of when sale and purchase are recorded in your account. Cash accounting recognize revenue and expenses only when money changes hands, but accrual accounting recognize revenue when it's earned and expenses when they are billed but not paid.
So hi, I'm gonna explain about Malaysian Financial Reporting Standard (MFRS). In November 2011, Malaysian Accounting Standard Board (MASB) has issued MFRS 101 presenting of a financial statement. The standard is applicable for annual periods that beginning on or after 1 January 2021. MFRS 101 is equivalent to IAS 1 presenting a financial statement as has been issued and amended by the International Accounting Standard Board. The function for this MFRS is to prescribe the basis for presentations to the general purpose of financial statement. It's also to ensure comparability between both company entities' financial statement of previous period together with the financial statement of another entities. Next, about the MFRS 101 is the disclosure. The first one is an entity should, as far as practicable, present notes in a systematic manner. The second disclosure is the measurement basis used in preparing the financial statement. Now, we move to the measurement of MFRS 101. The first one is going concern and the second one is the basis of accounting. For the going concern, when preparing the financial statement, the management should make an announcement to entry ability to continue. Basis of accounting. An entry should prepare its own financial statement except for cash flow information that using accrual basis of accounting. Last for this part is statement of profit or loss comprehensive income, MFRS 101. This statement should present in addition of profit or loss and other comprehensive income sections. Along the lines in this statement, we have profit or loss, the total of other comprehensive income, and the comprehensive income for the periods either is being total or loss. Malaysia Financial Reporting Standard MFRS framework was come into effect on 1 January 2012 and has been introduced by Malaysian Accounting Standard Board (MASB). It is fully compliant with the International Reporting Standard Framework (IFRS). It also can reinforce credibility and transparency of financial reporting in Malaysia. Any full and detailed descriptions about Malaysian financial reporting standards can be found at Malaysian Accounting Standard Board. Financial reporting framework will serve as a guideline to ensure its standard and basis needed is being fulfilled. In addition, all registered companies in Malaysia are required to prepare their own financial statement. Adoption of the Malaysian Financial Reporting Standard MFRS framework was a significant milestone for the capital market. Malaysian Accounting Standard Board (MASB) was established as a standard-setting body by the Financial Reporting Foundation (FRF) under the Financial Reporting Act 1997. Besides that, MASB together with FRS comprise framework for the exact purpose of preparing financial reporting in Malaysia. Okay, that's for introductions, and any other further detail may be explained by my fellow teammates.
I am Fatimah, and today I'm going to introduce about Malaysian Financial Reporting Standard 102, which is inventory. Inventories, as published and modified by the International Accounting Standard Board, is equal to Malaysian Financial Reporting System 102. The objective, the aim of this standard is to specify how inventories should be accounted for, the amount of expenses to be recognized as an asset and carried forward before the relevant sales are recognized is a major problem in inventory accounting. The definition: inventories are properties that are kept for sale in the ordinary course of business, in the phase of production for such sale, or in the form of product or supplies that will be consumed in the manufacturing process or in the rendering of service. Disclosure: the financial statement must show. The first one is the accounting policies used to measure inventories, including the expenses formula. The number 2 is the total carrying amount of inventories and the carrying amount in the classification application to the company, and measurement of the inventories. The level of expense and net realizable value shall be used to calculate inventories. And now I'm going to tell you guys the comparison between Apollo Sdn Berhad and Oriental Food Industry Holding Berhad respectively. In the aspect of Apollo Holding Berhad, the raw material consists of purchase cost on a weighted average basis. for Oriental Food Industry Holding Berhad, both procurement, conversion and other costs incurred in moving inventories to their current location and condition are included in the cost of raw material. In the aspect of Apollo Holding Berhad, finished good and work in progress. Finished good and work in progress consist of cost of direct materials and labor and a portion of manufacturing overhead based on the normal operating capacity but excluding borrowing cost. In the view of Oriental Food Industries Holding Berhad, cost of finished goods included the cost of raw materials, direct labor, other direct costs, and a proportion of production overhead based on normal operating capacity of the production facilities. In the views of Apollo, net realizable value is the average selling price in the ordinary cost of operation minus estimated completion cost and estimated closing cost. The expected selling price in the ordinary cost of business minus the estimated completion cost and the estimated cost required to complete the transaction is the net realizable value in the views of Oriental Food Industry Holdings Berhad. Net realizable value is the average selling price in the ordinary cost of business minus estimated completion cost and estimated transaction cost. That's all. Thank you.
MFRS 116 Property, Plants and Equipment is an asset of an entity for use in the production of goods and services that are expected to be used in more than one reporting report. The objective that laying under MFRS 116 was made for the function of user could get a better information about such entities' level of investment for their property, plants and equipment. The classes that need to be disclosed for property, plants and equipment in the financial statement, such as to determine the gross carrying amount and the method for depreciation used. Scopes for property, plants and equipment under MFRS 116 that should be implemented in accounting except if another standard of treatment is required. First, property, plants and equipment that is held for sale and discontinued operation. Second one is biological asset that is related to agriculture operation but does not apply to produce on bearer plants. There are two types of measurement that can be discovered, which are measurement at recognition and after recognition. For at recognition, element of cost will be comprised the purchase price after including the import duties and non-refundable purchase taxes. And for the after recognition is cost model, where its cost will be deducted with the accumulated depreciation and any deteriorated losses. Recognition for MFRS 116 is that the asset should be recognized only if the economic future flow will benefit such entities and the calculation of asset that needs to be measured can be dependable. First, it will benefit and flow to the entities through future economy. Second, the cost of the items needs to be reliably measured.